Hey traders, control the trade here, taking a look at Netflix. Netflix is going to announce earnings this Tuesday, January the 19th after the close, so I thought this would be a perfect one to chart. Good timing, and Netflix has extreme volatility, particularly during earnings. You can look back and see a lot of examples of that. Right now we have the daily chart up, and I have my Fibonacci retracements here starting at the all-time high. You can see we've never actually really truly challenged that yet. We've had a couple of attempts here to do so, and right now it just looks to me like it's kind of in a slow grinding pattern. It looks kind of bearish when you really think about it in the context of the rest of the market in tech. You would expect Netflix to have gone up a lot more during this huge run up. So you could look at that two ways. You could say that and say that's a bearish divergence, or you could also say it's consolidating in this bull flag long-term pattern. But if you really look at the short-term chart here, 50 period moving average really hasn't meant much. It's kind of just been slicing and dicing through it, but it's also been hovering underneath of the 20 period moving average lately, just around here, and we're curving down. So it's looking in the short term, it's looking kind of bearish to me. You have your 200 period moving average sloping upward. There's definitely, of course, some gaps back here. For the most part, most gaps do get filled. Netflix tends to run hot and cold, and when it gets cold, it tends to flush down very fast, panics everybody, and the story, the narrative that the news provides suddenly changes. It's amazing how quickly the narrative changes based on the chart, not based on Netflix themselves. Or maybe some silly analyst comes out with some BS report or downgrade on Netflix when it's really the same company that's had excellent growth. And I don't look at the fundamentals, but I do know that most of the analysts are dead wrong on this stock and many others. It's usually a contrarian play. It's usually a good sign or signal to go the opposite. Let's look at a different time frame. This is a weekly time frame, and you can see we're getting pretty close here to the 50 week moving average. It's a red line here, 50 week moving average, and we have the 20 week right here, which is at 503. There's a psychological number here of 500 that staying below is definitely more bearish than staying above. Plus you also have this moving average here. I mean, this looks like a reversal candle right here. Let's see the low here, 499.50. The close was 510. Very close to being a reversal candle. You could really call this the beginning of this downtrend here. So going back to the daily chart, I would watch the 200 period moving average here, 479.06. However, when earnings are announced, most of the time you'll see a huge spike in both directions. There's no reason to gamble on this. It's better to just wait and see how the earnings play out and see how the market digests the earnings and then make a play on it. Otherwise, you're just flipping a coin.